All right, let's dive in. Today, we're pulling back the curtain on a technology that's, well, it's quietly rewiring the entire financial system as we know it. They're called automated market makers, or AMMs for short, and they are the invisible engines making finance faster, fairer, and a whole lot more open for everyone.
You know that feeling, right? You've waited days for a bank transfer to go through, you've winced at the high fees, or maybe you've just felt completely locked out of the global financial system. That's the old way. But what if there was a system with no middlemen, no delays, and you didn't need to ask anyone for permission? That's the exact problem AMMs were built to solve. And to really get why the solution is so brilliant, you first have to understand the problem with the old system, the middleman.
So let's start right there. What exactly are the limits of a system that's built on all these go-betweens?
For decades, we've had to rely on big, centralized exchanges and banks, but they come with some serious baggage. We're talking slow payments that just crawl across borders, fees that chip away at your money, and a kind of gatekeeping that locks millions of people out. And maybe the biggest issue of all is what's called custody risk, the simple fact that when you use these services, you don't truly control your own assets. The exchange holds them for you, which, means they're always at some level of risk.
So, facing all these limits, innovators started asking a really powerful question. What if we could build a financial system without all the intermediaries? And the answer they came up with was a totally automated solution, powered by this ingenious tech called AMMs. So what on earth is an AMM? Well, at its core, it's a trading system that runs on algorithms. Instead of a bank needing to find a specific buyer for whatever you're selling, or a seller for what you want to buy, the AMM just does it automatically. It's a system that lets you trade directly against a pool of funds, all powered by nothing more than code.
And this comparison really shows you just how big of a shift this is. The old order book model, it's basically a matching game. You have to wait for another person to come along and take the other side of your trade. The AMM model, completely different. You trade directly with a pool of assets. And that means liquidity is always there when you need it, trades happen instantly, and the whole system is open to literally anyone with an internet connection.
Okay, this all sounds great in theory, but how does an automated system actually work without some big company pulling all the levers? Let's take a quick, and I promise, simple look under the hood.
So the heart of every single AMM is something called the liquidity pool. Just think of it like a big digital pot of money, usually holding two different kinds of tokens. This pot is locked inside what's called a smart contract, which is really just a piece of code that automatically enforces the rules. This is what you're trading against.
Honestly, the best way to think about it is like a vending machine for money. Seriously, you put one currency in, and another one just pops right out at a price that's already set. There's no cashier, no haggling, it's just a direct automated swap.
But how does the vending machine know the price? Well, it uses this surprisingly simple but really powerful formula, X times Y equals K. This little formula is the secret sauce that keeps the whole pool balanced. As more and more people buy one token, it gets scarcer in the pool, and its price automatically goes up. It's just supply and demand, but it's being enforced by pure code.
Now you might be wondering, okay, so where does the money in these vending machines actually come from? And this is the cool part. It doesn't come from a bank. It doesn't come from a corporation. It comes from people all over the world.
They're called liquidity providers, or LPs. And in this new financial world, literally anyone can become a market maker. By depositing your own tokens into one of these liquidity pools, you're providing the inventory for the vending machine. And in return for doing that, you earn a small cut of the fees from every single trade that happens in that pool.
And becoming an LP is actually pretty straightforward. You just pick a decentralized exchange, or DEX, you select a pair of tokens you want to provide, and you deposit an equal value of each one. The system then gives you a kind of digital receipt, and right away, you start earning passive income. But of course, it's not all upside.
Yeah, it's not risk-free. The main concept that LPs really need to get their head around is something called impermanent loss. Essentially, if the prices of the tokens you deposited change a lot, you might end up with less value than if you had just held onto them in your wallet. It's the fundamental trade-off, right? You're earning fees, but you're also taking on the risk of market volatility.
So we've looked at the mechanics, but let's zoom out for a second. Why is this technology more than just a cool new toy for traders? Why does it matter on a global scale, especially in places that the traditional system has, well, basically left behind?
This is where it gets incredibly powerful. For someone living in a country with runaway inflation, AMMs are a lifeline,
a way to protect their savings by swapping into more stable digital assets. For young entrepreneurs, it's a totally new way to earn passive income. And for a freelancer in, say, Nigeria, it means getting paid by a client in Europe in a matter of minutes, instead of waiting a week for a bank transfer to clear. It's direct access to the global economy.
And this quote just nails it. This isn't just a technical upgrade. It's a philosophical one. AMMs are fundamentally changing who gets a seat at the financial table, and they're opening it up to anyone, anywhere.
And by the way, all the information we've gone through in this deep dive comes from the fantastic book Automated Market Makers by War Library, which really provides a clear, structured look at how this technology is reshaping our world. So as we wrap up, let's just leave it with this final thought. This shift to a more open, more accessible, more automated financial world, it's already happening. So the real question isn't if it will shape the future, but what role will you play in it? Thanks for joining us.